Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We may be facing a renewed oil supply shortage, and this time reserves are at unusually low levels. The combined impacts of extended closures in the Persian Gulf, the Red Sea and the Black Sea are mounting, and just as we thought the May-June stresses had faded. But first, US mortgage applications rose slightly last week, and that was despite an unexpected fall in refinance activity. But since mid-June, this US housing market indicator has been essentially flat. And US mortgage rates are now at an 11-month high. US crude oil stocks rose unexpectedly last week when another fall was anticipated. Yes, it was minor, but still. Maybe it indicates that local production is rising faster than some assume, or surging imports from Canada or Venezuela, or maybe that demand is lackluster, or all three. US strategic reserve levels fell again into their lowest level since 1983. Today's US Treasury 20-year bond auction saw its yields surge through 5%, ending with a median yield of 5.12% and a high of 5.16%. That is up sharply from the prior equivalent event a month ago of 4.88%. And demand was lower too, down 4%. It is quite the rate move. Not to be outdone, the overnight German 20-year bund auction rose to 3.6%, up from 3.38% a month ago. Across the Pacific, Japanese exports rose faster than expected in June, up more than 19% from a year earlier. The weak yen helped, as did strong demand for electronics and other data center equipment. The June export level was their second highest on record, just a whisker off the March record. At the same time, their imports surged as well, up 25%, and also more than expected to be a new record high, just eclipsing the October 2022 level. Oil prices were high, but oil import volumes actually retreated there. The net result was a modest but stable trade deficit in June from May, but slightly worse than the small trade surplus in June a year ago. None of this helped the yen, however, because it fell to a 40-year low against the US dollar. Against the New Zealand dollar, it's only been this low in 2024 and 2007. In case anyone is still confused or unaware, the Chinese regulator, their Securities Regulatory Commission, has been organising the state-owned enterprise Home Team to bolster the Chinese stock markets recently, after they showed some negative indications. This has driven some good rises, but it is also a creeping state ownership in many listed Chinese companies. The Shanghai Composite closed up 1.8% on Tuesday, the Shenzhen component was up 4.8%, while the Chinex was up 7.1% and the Star Market Index jumped 8.8%. This is not to claim other governments don't manipulate markets, they do. But the Chinese moves don't seem sustainable unless the reasons for the Dow conditions that prompted the artificial buying are resolved. In other countries, regulators would get punished by investors if issues aren't resolved. In China, it's the other way around. And the Philippine-China dispute about who controls the sea off the Philippine coast is taking an ugly turn, with China posting racist trope video targeting Filipinos. It is unnecessary and grubby diplomacy, but going low isn't something China invented. Surprising most observers, the Indonesian central bank did not raise its policy rate overnight following the June out-of-cycle shift higher. It judged that the earlier move was all that was needed this time to defend the rupiah. In Australia, the latest update of the Westpac Melbourne Institute Leading Index, which indicates the likely pace of economic activity relative to trend 3 to 9 months into the future, suggests growth there is stalling. While the latest growth pulse isn't overly weak, it is broadly consistent with stalling activity through the middle of the year. Later today, the June labour market report will be released in Australia. It is expected to show tame job growth. The US Treasury 10-year yield is now just on 4.66%, up 3 basis points from this time yesterday and matching its recent May highs. And the price of gold has risen to $4,140, up $71 from yesterday. Silver is now at $60 an ounce, up $1.50 from yesterday. And oil prices are up another $2.50. and just under $87 a barrel in the US, while the international Brent price is now just on $94 a barrel and up $2. Hormuz transits are still just a trickle. There have been just 2 crude tankers and 3 cargo ships exiting over the past 24 hours, and 5 entering for new loads. 3 of these outbound ships were hit by missiles. The Red Sea is now also effectively blocked at Yemen, although a small handful of ships are still getting through. More than 700 vessels are waiting for things to calm down in the Red Sea. The Kiwi dollar is another 20 basis points lower from yesterday at just on 58.1 US cents. Against the Aussie, we're also down 10 basis points at 83.2 Australian cents. Against the euro, we're down 10 basis points at 51 euro cents. That all means our trade-weighted index starts today at 62, which is down 20 basis points from yesterday. And the Bitcoin price starts today at $66,141 and down 0.4% from yesterday. Volatility over the past 24 hours has again been low at just over plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.